Hey folks, Bruce Winder here, retail analyst. Hope all is well and you're having a nice summer. I thought I'd do a short video to support my LinkedIn and Substack today on Nike. So I listened to the Nike Q4 fiscal 2026 earnings review and commentary. Q4 revenue was down about 1% on a reported basis and down about 4% on constant currency. Nike Direct was down about 7% reported, while wholesale grew 4%, which is good. They got a tariff rebate, and they've declared that as part of their fiscal 26, almost to the tune of $1 billion. And their CFO is leaving. So overall, I mean, I think there's still a lot of work to be done. There's still, I think they've made some progress, but it's still they're not out of the woods yet. So when I went through the call, like I mentioned, Q4 revenue was about 11 billion, down 1%. If you look at the different, if you look at the different aspects of the P&L, gross margin was way up because of the tariff gift. It was 49.2%. SG&A was down 2%, which is good. So they're managing their costs well. And the earnings per share, when you take out the tariff gift, was about 20 cents a share, up from 14 cents a year earlier. So that's looking better. If you look at the different regions, North America grew 3% from a revenue perspective. EMEA, so Europe, Middle East, Africa, was down 6%. So some problems there. Greater China is where there's some real problems right now for Nike. Their Q4 revenue declined 17%. And then if you look at Asia Pacific, Latin America, down 1%. So they've got some work to do. Elliott Hill went through and discussed sort of what he thinks, where they are right now, acknowledge results aren't great and that they can do better. They talked about some win now priorities, the sport offense, and some of the progress they made in fiscal 26, some grassroots programs, the World Cup, some things they're doing on the supply chain to lower cost. Share price really didn't move that much. It went up a little bit after earnings were announced, but the problem with Nike is over a year, their stock's down about 43%, and over 5 years, it's down about 73%. So we'll continue to watch them, and we wish them nothing but the best. Thanks.